Hey guys, welcome back to the channel. If you're a Micron investor or thinking about buying the stock, this is a video you have to watch to the end. Because what we saw of Micron on Friday is it lost $21.37 a share. It was down by 4.81%. You can see it in the upper left-hand corner. But in reality, it wasn't just Friday. Micron stock is down almost 10% and lost almost $46 a share since their massive print on Wednesday. This is a company that just reported the greatest earnings in their history, and the stock is down almost 10%. We may be shaking our heads trying to understand what exactly is happening. And if we did, we could have missed a massive signal that happened on Friday. Because at the closing cross and in the after hours on Friday, over $5 billion quietly changed hands. And here's the piece that no one is talking about. Someone stepped in, either one or two massive whales, and bought $1.1 billion worth of Micron stock at the exact bottom. And if you don't understand why that matters, you're going to completely misread what happens next. Retail investors are looking at the chart thinking that the AI trade is breaking, but the tape is telling us a completely different story. Because this wasn't just a sell-off. This was a transfer of shares from weak hands to institutions with size. Today, I'm going to break down what exactly happened in the closing cross, what those 1.1 billion gigaprints mean for Micron, and what is the one price level that could define Micron's action going into the morning bell on Monday. But before we break down the tape, we have to zoom out for a second, because moves like this didn't happen in a vacuum on Friday. It wasn't random selling. It was a combination of stories. Profit taking after massive AI-driven run in semiconductors. Funds de-risking heading into the weekend with macro uncertainty still elevated. And a rotation of high beta names like Micron, high beta stocks like Micron, into more defensive positioning. On the surface, this looks like panic, but underneath, it's positioning. And that's exactly what happened in the final minutes of trading and in the after hours for Micron, and why it matters so much for the stock and what we could see on Monday. We're going to dive in and talk about exactly, but if you haven't done it already, hit like, hit subscribe to the channel. Let's start off by taking a look at just the stock and how it looked throughout the day yesterday. So first, I just want us kind of pull up a performance across the entire day. This is a candle pattern chart that's looking at candlestick patterns for every 5 minutes. But I want you to step back first before we dive into the technical signs that we saw through the day and just look at the overarching performance. Because what we see on the day is, one, it's ugly day for Micron, but it's a textbook bearish Maribozu. The stock opened up at 443.92 and it closed at 422.90. There was no upper wick, no lower wick. The bears stayed on the gas pedal from 9:30 a.m. to the close at 4 o'clock. And the volume was a significant story for Micron yesterday as well. There were 64 million shares traded. That is nearly double the 30-day average. This wasn't just profit taking. This was an aggressive distribution yesterday. We are now deep in the earnings gap from March 18th, from their March 18th print. The bears are trying to force a gap down back to the 400 or 405 zone for the stock. And this is where the 50-day moving average sits right now. And honestly, guys, this is the ultimate line in the sand for the memory supercycle narrative. And let's dive into the technical patterns overall. And I want you to look at each and every one of those 5-minute windows, because what we see on the screen is, and from a technical perspective, is a descending staircase. This is this pattern here is in a textbook example of sustained institutional distribution, and it's broken down into 3 phases that I want to call out, that I just put some things up on the screen to explain. First, the first phase was the morning flush. That's on the far left in the top there. This was right out of the gate. Micron, it tried to reach for that 450 level, and it failed. It got up to about 449, faced resistance, and then that created a high velocity kind of downward move that you see right afterward, right down to probably about the 11 o'clock time frame overall. This broke the morning highs and kind of created morning lows. And then we went into this consolidation trap zone between 11 a.m. and 1:30 p.m. The stock tried to base around around 435 level. However, every time there was a rally, it was sold into almost immediately, creating a series of lower highs. And then finally at about a 2 o'clock level, you can see at the bottom, the floor broke. It broke at the 430 level and gave way. This triggered an aggressive, kind of a final aggressive leg down to the close at 422.90. And I want you to next look at the volume bars in the bottom, because this tells a very significant story as well. Notice that the red volume bars are consistently higher than the green bars. This indicates that the selling was proactive, that traders were hitting the bid, and the buying was very passive throughout the day. And you look at that last volume bar at the far end, the final 5 minutes of trading for Micron. In a vacuum, that green spike may look bullish, but in the context of what happened throughout the day and what I'm going to show you in the closing cross, that high volume at a low suggests a liquidation event for the stock where the leverage was completely wiped out at the final bell. And the last piece I want to show on here before we move to the next graph is the RSI at the bottom. It's the line that is floating up and down. And you can see that the RSI spent the vast majority of the day below the 50 midline. This confirms that the bears were in total control of the momentum throughout the day. And while we know that an RSI that dips below 30 is a sign that the stock is oversold, this RSI on Friday stayed between 35 and 45 for most of the afternoon, most of the trading day. This is a danger zone for the stock. It means that it wasn't weak. It was weak enough to keep falling, but it didn't get weak enough to signal an overextend or look like it was overextended. It could potentially trigger an automatic algorithmic bounce. So that's what we saw throughout the day overall from Micron if we look at the candlestick pattern. Now I want to jump in and just take a look at what happened in the after hours and what happened at the closing cross. So we're going to jump over and take a look at some block trades. And if you're new to the channel, just remember, a block trade in the U.S. is anything that is more than 10,000 shares or $200,000 in value. For the chart that I'm going to pull up, I actually filtered it to make it a little easier for us to review. So I filtered it to any trade size that is more than $1 million. And you can see there was a bunch, but I want to call out one in particular here, and it's Micron's closing cross. And so I'm trying to highlight it overall because this is a massive sign for us. It was right at the close. Actually, here, let me do it one more. I forgot that I added something to make it easier to read. But you'll see in this single trade, we had almost 8 million shares hit exactly at the close, right at the 4 o'clock close, and it hit right at the 422.90 price. This was $3.3 billion in one tick. It was a massive market on close sell and balance. It tells us that despite the record HBM4 guidance that the company has given, the large funds right now were liquidating size into the weekend. Heading up to the bell, we saw aggressive sweeps across exchanges. Sellers were willing to sweep the order book to get filled instantly. This is what pinned the price at the absolute intraday low. And remember that volume chart I said at the end where it could look bullish? But in actuality, that was driven by this closing cross that was a bit of a liquidation event. Clearly, the whales were liquidating into the weekend with all of the macro uncertainty that's happening right now. But this is where the story takes a bit of a wild turn, because remember, that's at 4 o'clock. I want to show you kind of the next phase that we saw overall. And I call out 6 of them on the board on the screen here with those yellow arrows, because there was massive block trades that continued to happen after that closing cross. And you could see from the bottom, we had a $56 million block trade that was at 403, and 2 Godzilla prints that I'm going to get to in a minute that happened at 403 as well. And then we had a 404 for another 53 million, 405 for 30 million, 406 for 29, and finally 407 for 32 million, all at that 422.90 stock price is what they were traded. Now let's dive in and take a look at these 2 massive trades overall, because this is where it takes a bit of a wild turn. Because just minutes after that 3.3 NASDAQ closing cross, the whales showed their hands. We had these 2 massive Godzilla prints that I'm calling them hit the tape back to back within 8 seconds of each other for exactly, almost 569 million each. That's over 1.1 billion changing hands in seconds in the dark pool. This is a cross trade. It means that while the public market was panicking, 2 massive institutions, there could be one we'll say two massive institutions agreed to a deal at 422.90. Now, this can be stealth accumulation, but more importantly, what it tells us something more critical. It shows us that there was a willing buyer of over $1 billion at the exact low for the stock. A buyer of that size isn't stepping in at the lows unless they believe the 422 is the structural floor. They used this massive liquidity of the sell-off that we saw to fill $1 billion position without any slippage. So guys, this I think is a massive sign. And this is the first part one that I'm calling the initial hammer. And I'll get back to this in the end, but this was the initial hammer that we saw in the after hours. Now let's jump over to the next series. We're going to look at from the, just 4-10 hour all the way up to 6:30 overall. There was two massive trades here, two massive signals that I want to call out, and I'm putting them up on the screen there. So this was the first one. I'm going to say, now that we thought that the 1.1 billion was that double print of 403, if you thought that was just a fluke, look what happened 20 minutes later. So this was at 423. Another massive whale signature hit the tape at 300, and we'll call it 350 million. It was 347. Again, executed at that price of 429.90. So between 403 with those two Godzilla prints and now this one, we're looking at 1.5 billion in institutional dark pool accumulation at exactly the same price point. And while the 1.1 billion print was an initial shock to the system after the bell, this 347 million print proves that the buying wasn't a one-off event. It shows sustained institutional interest lasting deep into the first hour of after hours trading. And notice that the print was at 422.90 as well. Again, it is pegged exactly to the closing price. So this confirms that institutions were using that specific price level as the value zone. They were absorbing every single share available at 422.90. And to put that one trade in perspective, that 347, you can see right to the right of that, was 822,000 shares. That's more in that one dark tick than the stock usually sees in a 30-minute window of regular trading. This tells us that this wasn't one fund rebalancing. This was a coordinated value floor. And when you see the 1.5 billion stacked at 422.90, that isn't a coincidence. That is a defend level. And that's the second phase, which I'm calling the confirmation. And then finally, we have the third phase, which is the final support overall. So the story didn't end at 425. We saw another massive print at 455, $101 million print at that same 422.90. The institutions kept defending that price point for nearly an hour. And once that institutional demand was satisfied, what we saw after that is that we saw the price start to creep back up over and over. So I won't call it up on the screen, but what you saw after that last $101 million print is the price started to climb aggressively in the after hours. And by 6:30 p.m., Micron was trading again at 428 a share. So we think about it like this. Retail sees a collapse. Institutions see liquidity. Retail sells into fear. Institutions use that fear to build positions without moving the price. So today looked like a disaster, or Friday, looked like a disaster on the daily candle chart for Micron, but the tape reveals a masterclass in liquidity harvesting. Over 5 billion moved in the final hour, anchored by that 1.1 billion double print that we saw at 403. We are looking at a 1.5 billion plus dark pool fortress that was built between 4 o'clock and 5 p.m. in the after hours. This should all give us massive conviction that the 422.90 is the institutional line in the sand for next week. So just to summarize the three big moves that we saw in the after hours, we had the initial hammer at 403, which was the Godzilla prints that equaled 1.1 billion. That was followed, 20 minutes later by the confirmation showing that this level was supported. That was the $348 million after hours trade. And then finally, the final support that we saw at 455 for another 101 million, which caused the stock then to move in the after hours and reach that 628 level. So in total, between those three, We're looking at heavy volume of almost over $1.6 billion for Micron. All of these after-hour trades are telling us that the whales just built a fortress at 422.90. Don't let the red Marabuzu scare you out of the AI gigacycle. Going into Monday, don't just watch the price. Watch the behavior. If 422 holds, those buyers are still there. If it breaks, then we have to reassess. But until proven otherwise, the tape is telling us one thing. The smart money didn't run yesterday. It showed up strong in support after the bell. Hope you guys enjoyed the video. See you on the next one.